Hello guys, welcome back to my YouTube channel. This is Perfect Forex, and today I'll be doing a breakdown of the concept market structure. I'll be doing a quick demystifying and breaking down of the concept market structure. But if you are just seeing this video for the first time, or if you are coming across my YouTube channel for the first time, I would like you to click on the subscribe button and also turn on the notification bell so that whenever I get to post a new content like this, you guys will be notified. And also don't forget to share my content, my videos with your family and friends. Let them know there's something happening at Perfect Forex on YouTube. There are amazing content there. There is value there. Also, don't forget to click on the subscribe button and also turn on the notification bell. Okay guys, let's get on to it. Market structure. What comes to mind when you hear the word structure? What do you understand by the word structure? Basically, structure means the overall form of something. Did you get that? Structure means the overall form of something. Or taking it a bit higher or a step further, you want to say structure is the cohesive whole of parts. I don't know if you get that. I'll be repeating that again. Structure is the cohesive whole of parts. Let's take for instance a house. You get to see that the structure of a house is composed or comprises of parts like the living room, the dining room, the kitchen, the bedroom, the bathroom, and other places and other parts. These parts come together to form what we call the structure of a house. Taking this down to the market, taking this down to forex, taking this down to trading, market structure can be defined as the overall highs and lows that price make in the market. Quickly, let me go to my whiteboard to show you guys some things. I'll be showing you the graphical representation of what I just defined. Market structure is the overall highs and lows price make in the market. Highs and lows price makes in the market. First of all, when you open a naked chart, you either see either of these three things. It's either market is moving upwards like this, or the price is moving downward like this, or price is moving in a ranging manner sideways like this. The upward movement of price of the market is called an uptrend. That is, this upward movement is called an uptrend, and also this downward movement is called a downtrend, while this sideward movement to the right is called a consolidation or range. When you see market moving to the right in a defined pattern, in a defined manner, it is said to be that the market is ranging. Now, going back to our definition of market structure, we get to see that market structure is the overall highs and lows the market or price forms. Highs and lows. Highs and lows. Now, in an uptrend, you begin to see that the highest point price gets to is called the higher high of the structure, and also the lowest point price retraced to, that is this point, is called the higher low of the structure. Also consecutively, higher highs are formed, higher lows are formed in a what? In an uptrend. Higher lows. And also in a downtrend, when price gets to the highest point, it begins to reverse, and you get to see that market structure changes, and then you begin to see that sorry guys, I need to clean this so that I can make it more neat. You need to see that higher highs are formed, higher highs, higher lows, higher highs, higher lows for an uptrend. Then for the downtrend, begin to see that the structure changes, and then um um lower highs begin to form on the downtrend, and as market retraces, the lowest point market retraces to is called the lower low. The highest point market buys to on a downtrend is called the lower high, while the lowest point it retraces to is called the lower low. Now let's get on to this on our main chart. Let's see this practically. Now this is the crash 1000 index, and this is the daily. You begin to see that in this upward movement, you begin to see that price got to a point, a highest point, and then begins to move downwards. Price got to a point which is called the higher high, as I showed you graphically earlier, and begins to move downwards. And then you see that this happens consecutively, repeatedly like that, until price got to a point, higher high, higher low, until price got to a point, this point here, this point here, and you get to see that price began to revise. The trend, the market structure began to change from an upward movement to a downward movement. Did you see that, guys? And then we established it earlier that on a downtrend, the highest point price gets to, that is this point, price gets to, it's called what? The lower high of the structure. And the lowest point price gets to on a downtrend is called the lower low of the structure. Now these consecutive higher highs and higher lows form what we call support and resistance. In my next video, or in my subsequent video, I'll be showing you guys, I'll be breaking down to you the understanding of structure of support and resistance, how it is applicable to trading. Every time frame, now you can see that we are on the daily. Every time frame has its own structure. Breaking it down to the 4 hours, you see another structure here. You can see another downward movement here, and then you begin to pinpoint and pick out your higher highs and higher lows. So guys, that's what basically structure is all about, the overall highs and lows of the market. I don't want to make this video lengthy. I just want to make it as short as possible, sorry about that, so that you have enough time to digest it and go through it. So guys, if you're just seeing this video, I would like you to click on the subscribe button and also turn on the notification bell, so that you'll be notified whenever I drop a new content. Come on guys, I also want you to post on the comment section whatever you want me to talk about, whatever you want me to teach. I will be going through the comment section, and I'll be teaching you guys anything I deem fit is most needed at the moment. Okay, quickly let me just say something. Now I've come to discover that most traders prefer to trade using the indicators. Most traders prefer to trade using the indicators, and this will enhance your knowledge if you have a grip on the understanding of market structure. Many times you see indicators where the 70 level is placed or is marked, or the 30 level is marked, and then you are told to buy when whatever you are using, either a MACD or a simple moving average or whatever it is, or an RSI or something, touches the 30 level, you are told to buy, and also you are told to sell whenever it touches the 70 level. And you begin to see that most times it doesn't work that way. Now it is because those levels actually aren't marking resistance or support levels. They are just some levels that traders feel when price gets to this level it should reverse, which most times aren't the case. Now with your understanding of market structure, you'll be able to know when to sell or buy in the market. You will just be using your indicators as further confirmation of what to do in the market, either to buy or to sell. Guys, in my next videos I'll be trying my best to show you how you can understand support and resistance, how you can understand price action coupled with indicators, how you can analyze the market well and then use indicators as confirmation. So guys, I'll be ending this video here, and I hope to see you guys in my next video section. Thank you guys, and do have a great day. God bless.